of shillings and cents in the world of business. The Kenya Pipeline Company has announced a 21% increase in profitability in the last financial year, giving an interim dividend payment of 5 billion Kenyan shillings to the national treasury, barely a day after the president put unprofitable state agencies on notice with a threat of dissolution. This as the cabinet secretary for the national treasury, Professor Njuguna Ndung'u, saying that despite the government's investment of 5.7 trillion shillings in state enterprises, the return on investment stands at a mere 0.13%. About 140 state-owned enterprises are now on the chopping block as the government intensifies the push for better returns on investments.
We want to give that strength to the board, the management, so that they can innovate and help us in terms of creating value. The work and the role of government is actually to invest in those areas that provide and optimize public goods. But those who are acting in that space should give us those returns in terms of showing that they are optimizing that space, they are fit for that purpose, but they are also conscious that the government requires some returns.
That's not been a challenge to the extent that the space of petroleum in Kenya and in the region is really run by the private sector. And we only came in on the G2G to support the tight monetary policy at that time, when dollars to pay for the oil products. And you know, oil products in Kenya takes about 30% of the forex.